Quant has a shape that I just showed on Bitcoin on a, 15-minute chart. And I gave 3 specific frames of mind or rules about ways to think about this pattern. A lot of people call it inverse head and shoulders. I don't call it that. But if that's what you want to call it, whatever. A bottom formation, the most common way. 3 main things. The first one is 3 waves down. That's what creates inverse head and shoulders. It's the most common way crypto goes down on that time frame, right? I said it happens on all time frames. First big move down was here. Call that 1. Second big move down, 2. Third big move down, 3. Check. The second thing is, in order to know with an exceptionally high probability of exactly where it's going, like over 70% chance, right? Not at this moment in time, right? But maybe more like here or here. So you can't tell here at the bottom. You can start making that guess after you identify 1, 2, 3. Oh shit, I can make a decent guess now that it'll go all the way up to where this next rule would send it with an extremely high probability. I guess you could have guessed, honestly. Maybe here you could have guessed this high or low. Anyway, the second rule was you look back to local highs, 2 and 3. The second and third local high looking left. 1, 2, 3. It will go to the second or the third one almost every time. Way over 50% chance. Do you usually see this on the daily chart? No, you don't. This is that was like a Homer Simpson laugh? No, that's Family Guy. I just laughed like Peter. All right, anyway, that's just the way it works. 5-minute time frames, 1-minute time frame, it just does, like almost every time. What happens after here, whether it's a breakdown or a breakout, or a break up, which is a fake out, then breakdown, which is actually the third most likely way of it to happen, or if not tied for the second most likely way. Anyway, so let's mark those bitches off. So at this moment in time, you could have made an educated guess that Quant was at least going between these numbers. At this point right here, after you got above the origin line, or established another an uptrend. So technically right here on this candle, you would have had not just a good guess, an educated guess, but a probabilistic. So you would have had a trading edge all the way up to 154. Exactly. See here. Higher low. Now, somewhere around this area, because you established a daily uptrend. At that exact moment, this became way more probable than anything else. Bare minimum 154. So I've only gone over the first 2. What was the third one? The timing. And you can time the market to a certain degree or have a good educated guess on how to format your brain on when to expect weird stuff to happen at the neckline. How to do that is, remember what I said? I think I said it in a weird way so you remembered. The third one. Price is beautiful, right? Price action is beautiful and symmetry is beautiful. So therefore, it's got to be symmetric. And to be able to time, I don't know if I should go to that wick. I think the time might have started here or here. I know it's this one. and then maybe only to here. So between that point, what the hell just happened? So to know when stuff's going to go down or move, just start like getting more volatile. No, it would be around there. It'd be between this point and this point. There you go. That's it. It happens every time. Like it's almost every time. That's exactly when it started breaking down. So these shapes, the cool thing about it is that not only, so typically you won't see this on the daily time frame, right? That's probably why I wasn't even looking for it. That's kind of rare. Shame on me though. I should have caught that. The neat thing about these shapes, inverse head and shoulders, is you only have 3 ways it can, well, technically 4. It could break down before it ever forms. So you could be front running it and wrong because Bitcoin sends it down or whatever. That actually does happen quite a bit. So there are 4 outcomes. It breaks down before it ever happens, but it's actually the least likely. So let's focus on 3. But you got to keep that one in mind. Like you got to use risk weight. It can break down. The 3 most common ways by far that these shapes play out is it goes up to the neckline, gets rejected sitting down. Second, it gets to the neckline, fumbles around a little bit, maybe spikes low, especially on big caps, right? Because big caps, before those people getting ready to send it up buy it, they will have futures orders down lower, usually look left for a wick. That's where they're going to send it. And they know they're going to send it up. They already have calculated how big of market buys and what time, in what time frame they must do it, because they've been likely studying the order book for a while, right? Advanced algorithms, that's what they're doing, or at least part of what they're doing. Probably doing a lot more than I would ever know. But so in the second one, it fumbles around there. Often before it breaks out, it'll spike down so that those big players get ready to send it up. They sell that same asset on spot price into their futures orders, which is technically not even the same thing, right? Futures are literally like paper. It's not real. It's an IOU literally, but they send it into their IOUs. Once it hits, now they're longs in shape and they buy it all back and start sending it. But in general, it goes to the neckline and breaks out. But within that, the bigger the coin, the more likelihood it is that you'll have, for that time frame, 1 candle. So if you're looking at a 5-minute time frame, it's a 5-minute candle. It's daily time frame, it's 1 day. It'll be sent down and then sent right back up before it breaks out. That's number 2. The third most common way is what just happened here. And I don't know if this is technically, this might be tied for the second, whatever. It goes up to the neckline, breaks out, which was a fake out, and breaks down. That's it. So with these patterns, not only do you know that there are only 3 possibilities of the way price is going to move at the neckline, but you also know roughly when to start looking for it. So you're not entering a freaking position too early and expecting, I'm going to make money this hour. No, you're not. Look at the symmetry. You have a week to wait. So forget about it, right? And that's Quant.